Hello and welcome back. Now, last week we brought you an exclusive interview discussing the merits of gold over the doomed paper currencies. Sticking with that topic, I'm joined now by Roberto Falzoni from Dukre Asset Management. Roberto, thank you very much for joining us in the studio.
Good morning, Natalie. Happy to be here again with you.
Now, analysts have estimated that currency prices are likely to devaluate while the price of gold is set to rise. British bank Barclays have even opened a new gold vault just on the outskirts of London to facilitate sort of this new obsession, as it were, for the precious metal. Are currencies such as the euro, the Swiss franc, the Japanese yen, are they becoming redundant now in favour of gold?
Yes, I would say that I consider myself gold today as an alternative currency. On top, with interest rate in major currencies at zero, holding gold is not anymore expensive. Gold has recently break to new high territory against euro, against Swiss franc, and even against some emerging market currencies like Indian rupee. It's very close to new high against the US dollar, against the yen, and even against the Australian dollar. I think that technically we broke out of a consolidation range since last year that had a 15–20% correction in the gold price. But recently, in the last months, we had a quite nice run-up. We broke out of this triangle, which in technical terms means that now we are heading really to new high territory. I expect gold prices against the euro and Swiss franc at least to have another 15–20% higher objective. So I think central banks are flooding the market with cheap paper, and this is good for. This is going to be good for gold for another moment. New vault in the UK. I think Switzerland is full of gold. If you go to a Swiss bank, you cannot even open up a safe anymore. It's plenty of people who have been storing gold in the last 2–3 years. This is another sign that people do not trust governments, do not trust central banks' action, and they prefer to go back to gold, where finally these people cannot print it anymore. So that's a little bit the situation right now, and I think that it will be the same for the next 12 to 18 months.
History shows that gold has a high correlation with inflation. How does that sort of factor into our discussion?
I think that gold has always been a leading indicator to inflation. That's why when you have so many people saying there is no inflation, why gold is rising? And so in history, this has been shown that gold has always been leading, inflation. Central bank that have been actively selling gold 10 years ago when gold prices was $300. Now we're at $1,800, shows that they are not, a good indicator to predict where gold price should go. So for me, inflation is going to come, and it's going to come with high digit numbers. Why? I mean, as I was saying before, central banks have just been printing money. We have a huge debt. And there is, for me, no solution to the current crisis. I mean, there are two solutions. One is to default on debt. Greece has more or less done so. Of course, we call it voluntary reduction of their debt, but truth is that they've been defaulting. And even now, after a reduction of 75% of the principal, they are talking that they are not able, or they will not be able to pay whatever is left. What's happening right now in Spain, in Italy. I mean, we are trying to reduce, the burden of interest rates, to control the debt. But of course, we are creating recession. So you reduce the spending, but they reduce by putting more taxes. So there is less income. So the deficit is has not been reduced. So the other way to solve the problem, of course, is inflation. Because at that moment you will be able to repay back your debt, but with the devalued currency, with money that you're printing. So it's just a matter of when it will happen, not if it will happen.
So if we look ahead now to 2013, as the markets are doing so, where would you advise Dukascopy viewers to place their investment?
Okay, first of all, with me. That's the natural question. So, but let's say for a European-based investor, if I take different asset classes, and I will start with currency, definitely I would reduce the euro exposure to a minimum, so to diversify out of euro. I think that after this rebound that we have been living in the last 2 or 3 months, that was mainly due to US dollar weakness, or a little bit risk on again, then really to euro strength. Euro will start to head south again and break the 120 level against the dollar. So definitely diversification out of euro will bring profit and to me reduce the risk for the portfolio. Secondly, I would definitely have a large position in gold and silver. That, as I say, I expect them to rise in between at least 15 and 20% in the next 3 to 6 months. I would be short long-term bonds. I think that one way or the other, or because the economy will pick up, or because, you know, this central bank's printing will create this kind of paper inflation, long-term bonds that are totally manipulated market are a clear sell. If I would have to choose in some equity markets, I would probably choose a market like China or Russia. They've been done, especially China, relatively poorly. But I think that Chinese authority will kick in to boost this market relatively soon. So I see there some kind of appreciation.
Now, Roberto, we're going to give you the opportunity now to put your money where your mouth is, as it were, with the Dukascopy question. Now, it quite simply is, if you had $1 million to invest for 1 year, what instrument would you place it into? So if we take a look at the chart, we've got real estate, equity, bonds, gold, cash, and oil. Now, $1 million for 1 year, where would you put it?
Clearly, I would stick, you know, to gold.
You're going to stick with gold? Okay,
exactly.
all right.
My favorite choice, and I can tell you that in my portfolio, of course, I hold a substantial part of gold. So I'm here for Dukascopy contest, but even on my portfolio, I'm invested in gold.
That's great. So gold for you really is becoming sort of the new currency.
Exactly. So I think that until we see more clear, there is where I feel the more safe and where I think that we can make some nice profits.
That's great, Roberto. Thank you so much for your comments.
Okay, thank you, Natalie.
For more technical analysis and to see if Roberto made the right choice, stay tuned to Dukascopy TV.